Hello and welcome to my YouTube channel. I'm Jessica Sin and I talk about personal finance and investing. And based on some requests from my video viewers, today I'll be talking about bank run, the collapse of financial system, past financial crisis, etc. And this is a serious topic because banks are like the backbone of an economy as well. So recently in March 2023, we have had the world's second and third largest bank run in history. On the 10th of March, Silicon Valley Bank collapsed and was seized by regulators. And 2 days later, on the 12th of March, we had Signature Bank collapse and was also seized by regulators. So what exactly is a bank run if you do not understand yet? And how can it cause a financial crisis? What happened in the year 1929 during the Great Depression? And what is the impact of a bank run? We will dive more into it in this video. So what is a bank run? Now a bank run occurs when a lot of the bank's customers rush to withdraw their deposits from the bank at the same time because they may fear that the bank may become insolvent in the near future. What is insolvent? Insolvency happens when a company's assets cannot cover its liabilities. So in the case of a bank collects deposits from customers and then lends out a portion of it to borrowers. And then that is how banks make money. That's how they operate, right? So if customers request to have their deposits returned to them, then the banks must fulfill those requests by returning them the cash. But if a bank does not have enough assets, does not have enough cash or other short-term securities on hand to liquidate in order to get the cash to return them to the depositors, then it means assets cannot cover liabilities, and so the bank would be insolvent. Now, it may be that the bank is not even insolvent in the first place, but because customers panic and all of them rush to withdraw money from the bank at the same time, the bank cannot fulfill such a high volume of withdrawal demand. And so, it may just become insolvent because it may not necessarily hold a large amount of cash sufficient to satisfy the withdrawal requests. Now, if we go back into history, we look at what happened during the 1929 Great Depression. So the stock market collapsed and a lot of people lost money, like a lot of money. So people had good reason to panic, and when there is panic, people prefer to hold physical cash instead of, investing in stocks or other risky assets. So people want to have cash, and a lot of them rush to their banks to withdraw money, cash from the banks. So at that point of time, those banks were not able to satisfy such a huge volume of withdrawal requests. And so you have a bank run whereby more and more people get panicked and more people rush to withdraw their money, and the banks cannot return those money. So in response to what happened in the 1930s, the US government stepped in and established some systems. One of it is reserve requirement, whereby banks are required by law to keep a fraction of customers' deposits as cash reserves on hand, so that when customers request to withdraw their deposits, banks should be able to satisfy those withdrawals by holding those reserve cash on hand. And additionally, they also set up the Federal Deposit Insurance Corporation, FDIC, which insures depositors up to $250,000 US per financial institution. So there is insurance for banks. Now, almost 100 years later, and we are dealing with bank runs again? Oh, well, it's just a repeat of history. Will it get as serious as what happened during the 1930s period? Well, what happened to Silicon Valley Bank? We see throughout the year 2022, the stock market crashed badly, right? And a lot of tech companies have their valuations drop significantly. A lot of tech stocks lost like 50% or more of their market value. And also venture capital funding dried up. So companies do not have a lot of venture capital to fund their operations. So they are more in need of cash. And at the same time, because they are cash strapped, a lot of companies have also laid off their employees. You can see like Meta, Google, etc. They are all laying off thousands of employees. So really the tech industry is facing strong headwinds. And Silicon Valley Bank serves a lot of tech companies. So a lot of these tech companies are trying to withdraw their money from Silicon Valley Bank at the same time because they need to use the cash, and venture capital funding has dried up. And Silicon Valley Bank does not have enough liquid assets to cover those withdrawal demands. Okay, so it has some assets, but it holds US securities as assets. Now, throughout 2022, the US Central Bank, the Federal Reserve, has been increasing interest rates throughout the whole year in order to bring down inflation. Because interest rates have an effect on inflation whereby it makes borrowing more expensive, so it discourages companies and consumers from spending more money. And if people spend less, then perhaps prices would fall. So that is what the US Central Bank is trying to do by increasing interest rates. But interest rates have an inverse relationship with bond prices. So if interest rates increase, bond prices actually decrease. And a lot of banks hold US government bonds as assets, as reserve assets. So because interest rates have been rising, the value of bonds have been dropping. So the bond portfolio of banks have been declining in value. So when assets are declining in value, people are worried that these assets will not be able to cover the liabilities, which are customers' deposits at the bank. So people are starting to be fearful and try to withdraw their deposits at the same time. So you have a bank run and eventually it collapsed. And only 2 days later, after Silicon Valley Bank collapsed, we have Signature Bank, which also collapsed and was seized by regulators as well, all within just a few days. If you look back at 2008, the global financial crisis, you had the Lehman Brothers collapsing and also other financial institutions like AIG had to be bailed out by the government. If not, it would cause like a really even bigger crisis if there are no bailouts and all the banks are just left to collapse like Lehman Brothers did. So the government had to intervene. The US Federal Reserve had to print money in order to keep the economy afloat. And all this money printing was what caused the US stock market to have one of the greatest bull runs in history. If you held US stocks throughout the past decade, you have earned a lot of money. But by the end of 2021, things reversed and the stock market started plunging down. The US Federal Reserve started to hike up interest rates instead of printing money, which reduced interest rates. So things are starting to reverse, right? And now people are losing confidence in the financial system again. So what happened after that was that the Federal Reserve stepped in and started to reassure people that, yeah, we will pay you back your money. So as a depositor, you will get all your money back. Don't worry. So they're trying to maintain, calm among the public, and then they start to print money again. Now, Kathy Wood, which has been a long-time supporter of Bitcoin, also has some of her thoughts to say, and that she said that these bank runs are actually a sign that the traditional system is already failing. Now, the collapse of Silicon Valley Bank is seen as a sign that the traditional financial system is fragile, right? So after Silicon Valley Bank and Signature Bank collapsed, we saw that banking stocks have plunged significantly, losing double digits within a few days, and a lot of people have started losing confidence in banks. In fact, we saw that the downloads of banking apps decreased, while the number of downloads of crypto exchange and wallet apps increased. So people are actually flocking to cryptocurrencies as an alternative to the traditional banking system, because Bitcoin was actually introduced in 2009 as an alternative to banks in the wake of the financial crisis in 2008, right? So when people lost confidence in banks, people need to seek safety in other assets. So traditionally, gold has been seen as a safe haven asset. So during times like war, like financial crisis, people will buy gold. But now in modern times, we have people also flocking to Bitcoin instead, which is seen as an alternative. And people are calling it digital gold as well. So cryptocurrencies are actually decentralized, right? Decentralized meaning that it cannot be controlled by any single entity. It cannot be controlled by the government, it cannot be controlled by the central bank, or even any other private banks. So this is why it can be seen as a good alternative to the banking system, right? So if you're looking to invest in crypto or trade crypto, do check out Bybit platform. The link is in the description section below. I'll be also teaching beginners on how to buy and sell crypto. So should you be buying Bitcoin or other cryptocurrencies now? Well, that is up to you to think. If you have the patience to hold for at least 1 to 2 years or more, then you can consider dollar cost averaging. Start buying a bit of Bitcoin while it is still at a discounted price, and try to manage your risk by dollar cost averaging. So put a specific amount into it every month if you wish to, so that sometimes you might be buying at a higher price. Sometimes if it crashes, you will be buying at a lower price, but over the long run, you will be buying it at an average price between the highs and the lows. So you do not even have to guess what is the best price for you to buy. You will still be buying in between the highs and the lows if you keep up with it consistently. Now, if you want more analysis on what might happen in the short term and what are the potential price targets to watch, then you can join my paid Telegram group, where I'll be sharing more of my analysis and also market updates. Now, because I am based in Malaysia and almost all of my viewers are from Malaysia or some from Singapore, so someone reached out to ask me that what would happen to Malaysia banks if such a situation happened, and whether the bank run situation in the US, if it worsens, will it spread to Malaysia as well? So what should we do as a customer of a bank? So, well, in Malaysia, I would think that the systemic banking failure, if it does happen in US, whereby we have a whole banking contagion, it should be just tied to the US. I don't really see its effects spilling over to Malaysia, whereby there will be also bank runs. Although, if you look at the financial impact, there will be financial impact. So if the US stock market crashes because of a whole banking crisis happening, then Malaysia's stock market will crash as well. So there will definitely be financial impacts. But in terms of bank runs, I would say that bank runs in the US should not have much of a spillover impact until it also leads to bank runs in Malaysia banks. I would think that the assets and liabilities are quite separated between Malaysia banks and US banks, unless we have a Malaysia bank that has a very large exposure to US assets or liabilities. Then there would be an impact there, but I don't really see that happening unless there is some banks that, I don't know, they deal with a lot of international assets and deposits such that they also have a huge exposure to US banks. Then that might be a problem. So if there is such a problem happening to any of the banks in Malaysia, so what would happen? Well, similar to the FDIC in US, which insures your banking deposits up to 250,000 US dollars. In Malaysia, we have PIDM, which will insure your deposits up to 250,000 Malaysian ringgit. So if you have less than that amount in your bank and a bank run happens for your bank, then you don't need to worry because PIDM will basically pay back you what the bank owes you. But if you have more than 250,000, then PIDM will only cover up to 250,000 unless they are generous enough to, pay you back the full sum that you have, even if it exceeds 250,000. So that would really depend on what would happen. But I don't think that Malaysia will have a very serious bank run like what happens in the US right now. So hopefully don't worry too much, although I would say there would be impact on the stock market and crypto market as well if such a banking crisis do play out at a large scale. So stay safe, people, manage your finances well. This is a time for you to learn as much about finance as possible to prepare for whatever is ahead, whether it's a major crash or a bull run next. You want to learn as much as possible, and you can do that by following me on social media and also subscribing to my YouTube channel. So if you learned something new from this video and you enjoyed the content, do click on the like button to support me to make more videos and subscribe to me. Alright, thank you for watching and see you in my next video.